Let's explore the enduring allure of tangible investments, art and precious metals. This segment highlights their significance in modern investment strategies. The precious metals market, projected to reach $403 billion by 2028, remains a staple for investors. These assets, including gold and silver, are not just commodities, but safe havens during economic fluctuations, often acting as inflation hedges. Meanwhile, the art market, particularly in contemporary and digital art, is flourishing. Art transcends aesthetic appeal, emerging as a financial asset influenced by rarity and artist reputation. Both art and precious metals offer diversification, moving independently of traditional markets and adding security to investment portfolios. However, they require careful consideration of liquidity, valuation, and additional costs like storage. As we delve into these tangible assets, we recognize their crucial role in diversified portfolios, symbolizing the lasting value of physical assets in a digital world. Now that I see it, I'm getting confused with which segments we're doing because I thought that we were switching them around. So that's on me. So what do you guys want to talk about? Are we still talking about Bitcoin and blockchain, or do we want to talk about, let's go, let the conversation go naturally. We were talking about crypto and blockchain. So Rick, you mentioned that you're excited for the spot Bitcoin ETFs. And you wrote your book a little while ago. It's been a little bit, right?
It came out in 2021, The Truth About Crypto. Mm-hmm.
Yeah, so The Truth About Crypto, it's been a little while. Things change really quickly in the digital currency market. Can you review really quickly like some of the core principles that you emphasize for investors in your book?
Well, the real key is to understand that this is a brand new technology. It has nothing in common with any of the asset classes we've grown up with. It has nothing in common with stocks or bonds or real estate or oil and even gold and precious metals. It is totally new and different, and therefore requires a new and genuine look at it to understand the underlying technology of blockchain, which is software. That's the difference between this and fads. This is a technology that has business application, and Bitcoin is the first use case of blockchain technology, but it doesn't stop there. It merely started there. So people need to simply understand how this works. They need to also understand the risks. They need to understand how you fit it into a diversified portfolio. You need to understand the technology the same way people need to understand how remote controls work to access their home audio video gear. This doesn't come naturally because it's something that we're not familiar with. So I believe that it's an exciting technological innovation because blockchain technology allows businesses to operate faster, cheaper, safer than traditional ledger technology has allowed businesses to do. And it's going to be able to help companies save massive amounts of money and by extension, increase profits. Because of the nature of the technology, it also allows for inclusion. People who currently don't earn enough money to open a bank account, and we're talking about 1 billion people on the planet, who live in abject poverty, according to the UN. These folks don't have enough money to open a bank account, or they don't live anywhere near one. Well, now, thanks to crypto, you don't need a bank. All you need is a cell phone. You don't even need a smartphone. Just an ordinary cell phone is all you need to be able to obtain a wallet, a digital wallet, and buy Bitcoin. And you can transfer it to anybody, anytime, 24/7, 365, virtually instantaneously and free. Compared to the global banking system, where if you wanted to move money from one country to another, it can take 5 days and cost 6.5%, 20% in sub-Saharan Africa. So this is a revolutionary technology that is really changing the nature of finance, which is why we're really very excited about it. But it is new and different, and a lot of it is unknown. We don't know what the regulations are in a lot of countries. We don't have the treaties in place yet. A lot of tax rules are yet to be written. This is, we're kind of like 1920s automobiles. Back in the 1920s, there were 200 automobile manufacturers in the US. Today, there's 4. So we don't know who the survivors are going to be. And at the same time, in the 1920s, cars were incredibly dangerous. They didn't have brake lights. They didn't have windshield wipers. They didn't have seat belts. And we didn't have stop signs, traffic lights, and speed limits. So the first thing that we had happen after Henry Ford rolled cars off the assembly line is that we had car accidents. It took a while for governments to create the rules of the road that ultimately made cars so much safer today than they were 100 years ago. It's kind of where we're at with crypto. It's new, it's exciting, but it's a little bit dangerous. And that's why you need to have a calm, cool head about yourself when dealing with it. You need to limit the exposure so that you're not harming yourself financially if you do something wrong. You need to learn how to avoid the scams and the frauds, which are unfortunately still prevalent. I am really excited about the Bitcoin ETFs, predominantly because for the ordinary, average, everyday consumer and investor, the ETFs provide a familiar, comfortable, and much safer way to engage in this asset class than if they try to do it on their own, surfing the internet to try to get a digital wallet, dealing with private keys from an offshore unknown entity that could end up being the next FTX. So I like the ETFs largely because they have simplified the situation, they have dramatically increased the safety, and they have made it easier for people as their first step down into that rabbit hole. But I think once people start to get engaged via these ETFs, they're not going to stop there. They're going to discover the problems and limitations of the ETFs. Number one, it's only Bitcoin. It doesn't give you access to any of the other crypto environment, meaning you're not getting diversification. Second, it's a security, which means it only trades when the stock market is open for business, and that's only weekdays except for holidays. Bitcoin's price moves so dramatically, you miss out any opportunity if there's volatility at nights or on weekends or holidays. So and you also have the annual fees of the ETFs, which you don't have when you buy it necessarily on your own. So there are issues, limitations, but I think it's a great initial way for people to get engaged. And this is going to be the door opener that's going to result in millions, billions of people participating in crypto for the very first time. So I think it's exciting, but I don't want us to get ahead of ourselves. I don't want people to put themselves in danger of risking their personal financial security over this. But I think we can effectively achieve a proper, comfortable approach for engagement in this space.
Gary, besides sharing a drink with Miss El Salvador, what do you hope to learn through your visit? And as a research guy, what are the implications of a government making the investment in buying Bitcoin?
Well, so first of all, I think there's a huge advantage to when you go to these places talking to the people. And I travel a lot. I spend most of my winter living in different countries, and you learn a lot about their finances, their economy, their lives. They'll tell you all kinds of personal things. The only thing you need to do is ask them the question in a non-judgmental way, right? You just want to convey, I'm interested in getting to know you. I want to understand, what you're dealing with and what your life is like. And people will open up and they'll tell you an enormous amount. And the thing that I think is really interesting for me, the case for Bitcoin is very clear, which is the one that I made before, in which David, I think, illustrated perfectly, saying, hey, $6 trillion of fiat currency creation, right? We have a dollar that's declining in value in terms of purchasing power. And so that's the thesis there. But when you take a look at El Salvador, they've had societal changes and hard money, meaning money that isn't easily replicated or debased, is correlated with low crime rate, high rates of investment, beautiful art, fantastic architecture, societies that work well, are low crime, and invest for a future. Societies with high inflation, with soft currency, where your money can be debased and the value of it disappears. You have ugly art, ugly infrastructure, ugly architecture. You have high crime. People don't invest. They're incentivized to have a very short time horizon on everything and to simply spend their money as soon as they get it. Because how do you save in Argentinian pesos? You can't. You lose 10% of your value every month. So how do you do things like save for a house or save for an education? These things aren't possible in bad currencies. So I actually believe that fiscal policy has a massive impact on people's lives. But if you really want to find out, you need to go there and talk to the people and engage with them and find out what their lives are like and ask them those questions.
Gary's raising a really important point that I think American investors too often forget, which is the fact that Bitcoin is a global asset. One of the most common questions that I get when I do training sessions for advisors on this subject, the question I get is, why do we need Bitcoin? And that's a kind of a fair question if you're an affluent American. I mean, we have a banking system in this country that, although it's really easy to criticize it, we all love to hate it, it works pretty well. You know, I get my paycheck direct deposited to my bank. I can access it through an ATM or my debit card pretty easily. I don't have to worry for most cases that the bank's going to suddenly get shut down. And even if it does, I got FDIC to protect me. The banking system pretty much works okay. But if you're in countries like Argentina, Zimbabwe, the list goes on, where people get paid in current local currency cash, and the first thing they do is run to the grocer to buy bread before the currency gets debased by 50%, and they can only buy half as much bread tomorrow as they could buy today. We have to remember that the reason there's so much excitement about this is not necessarily affluent Americans who can regard Bitcoin as an option, but for an awful lot of people around the world, I'm talking billions of people, this is an essential savior to their financial security.
David, I think you had something to add earlier.
Well, I mean, just to Rick's point, we don't necessarily talk about, buying the Japanese yen or some other fiat currency to make money. And I think there's the difference between the use case for Bitcoin, which, right now, money needs to be convenient and it needs to hold its value. On that front, Bitcoin is neither. I mean, a couple of years ago, I bought a watch at a jeweler using Bitcoin. It took 20 minutes because I had to get the invoice, send the Bitcoin to Coinbase. Then after it was verified, then I was able to take the watch out, but then I had to pay capital gains tax on the Bitcoin I sold in order to purchase the watch. And so from that aspect, if the monetary system is broken somewhere, like in Venezuela or Argentina, this is sort of good enough, Bitcoin, but it's by no means sort of as easy as other fiat currencies, because at this point, we don't have the additional layers on top of it. So Bitcoin itself, the blockchain, that's sort of the base layer. That's sort of the equivalent of just having money at the Federal Reserve, which as individuals, we can't do. But on top of that, there's secondary layers. And in terms of debit cards through the banking system or credit cards or Venmo. And that's where there's some excitement where Bitcoin or Ethereum, can be helpful if once we get these additional layers, because right now we're way down here sort of focusing on the base layer, and it is incredibly inconvenient to use Bitcoin for what it was designed for as a way to actually buy things or use it. At this point, it is effectively digital gold, because nobody, just as we don't pay for gold because one, it's inconvenient because it's so dang heavy. The same, that's kind of where Bitcoin is now, unless you're somewhere where the fiat system isn't working. And so we do want those additional layers, and we want the regulation to support it. When you think about FTX, when you think about BlockFi, where these individuals running these businesses essentially stole the client's money, they commingled the assets, and they didn't act like a true broker, a traditional financial brokers are supposed to do. And so the additional regulation is also another layer that's important so that people have trust in these type of assets. And that's something that's not there yet, but hopefully coming along.
I think David makes an excellent point here. And the way I might reframe it is to say there are trade-offs. And so the negative is certainly there's no 800 number to call, right? You can't call the manager. There's nobody to help you if you have a problem. You need to actually do research, right? It's if you want to own Bitcoin and use Bitcoin, you need to do research. There's no Bitcoin help desk to call for that. And that does make things difficult. And it does mean that there's a learning curve. But, just like we all learn to balance our checkbook and use banking apps on our phones and use our ATM cards, this is knowledge that can be acquired, but it does take effort. But here's the other side of it. The other side of it is that is money or an asset that can't be confiscated or debased by bad policy. It is insurance against bad government decisions. And, we think about it in terms of, US policy, but, you guys were just making this fantastic point that, hey, there are parts of the world where your currency really does get debased. And I lived in Buenos Aires for part of last winter, and you'd see as soon as people would get paid, they were instantly converting their currency. They spent an enormous amount of time and energy and resources trying to protect the value of what they own. You can't rent an apartment in Buenos Aires. I spoke to people there, and you should see what it's like. You can't buy a house. When you actually understand the restrictions there as a result of bad government policy, you understand it is worthwhile to learn to use these alternative assets, because to have something outside the system provides you insurance against bad government decisions.
Well, I think it's notable that we have three very smart investors here, all paying very close attention to cryptocurrencies and to blockchain. I want to get back on track now. I'm going to show segment 4, and we will actually talk about the right topic.